Hey traders, John Hal here. I'm going to talk about a situation where you should never trade because you're probably going to get chewed up both longs and shorts. So anyway guys, before I start this video is just education only. I'm teaching you and I'm educating you some extra things to put into your arsenal of tools that is the big scheme of things of what it takes to be a long-term successful trader, and that is a hard thing to do. Anyway guys, so that's what this video is all about. It's just be about education. All right, guys. So let's get straight into it. Anyway, guys, first link in the description. Click on that to come to join me on my next live training. Let's get straight into this video. So what I wanted to talk about today is never trade this. And what I mean by that is this, is that when we are trading, right, we're trying to jump on moves that are likely to move, right? It's like we're trying to jump on momentum, right? Momentum is a real big thing. But one thing I've found is that, including myself in the past, and sometimes even I catch myself going to do it now, is I try to jump in the market when there's no momentum. And what I mean by that is this. Let me see if I can get my little pen here. Is when there's no momentum, right? And you can see I'm looking at my 3 moving averages now: the 52, the 20, and the 9. And so whenever we start to get the moving averages, especially all 3 moving averages. This is the 52, this is the 9, this is the 20. See how they're all coming together through here? See what actually happened with the market? It didn't really go anywhere. You can see how they're all coming together through there, all 3 moving averages. This whole area through here, there's no momentum in the market. So never trade this here. The reason why is because, again, there's no momentum. Is it going to go up or is it going to go down? That's like toss a coin, right? Toss a coin, we just don't know. So whenever you're trading the markets and you're looking at your chart, have a few moving average on there, a bit of a longer term, a bit of a shorter term, and a real short term, and see what they're telling you. Are they starting to fan out, or are they very tight? You know, if I go back and show you other times in the past, like look at it back here, right? Like back here, and again, as you can see back here, right, like the moving averages really didn't separate at all by looking at this, but they're looking at this chart here, right? Look at it through here, like the moving averages were all just sideways and come down. We all went sideways through there and we're sideways through here, and this was the moving average. You see how the markets really didn't really fan out. Like it started to fan out here, didn't it? And then obviously the market reversed, so momentum dropped here, but then it soon came straight back up. Now. Again, guys, whenever the moving averages are doing this, you start to see they're really close. There is no momentum in the markets. The moving averages are great to show you where is the momentum in the markets. And so by looking at that and by trading that, you can actually see what I'm talking about there. So if I bring up, say, let me show you an example of what I'm talking about here, where there's no momentum in the markets. Is right now, as I'm doing this recording, silver and gold is a great example of where there's no momentum in the markets, right? Look at this here. Look where the moving average is. Now, again, we're talking about momentum, right? Look at all the moving averages. They're all coming close together right now. Never trade this. Why? Because again, guys, trading is about probability, right? Trading is all about getting on those suckers that are really likely to move, and it's about probability. We want the probability on our side. And when the moving averages are coming really close, like this whole time through here, basically, for the last, say, 6 months, the moving averages are coming closer and closer. What's actually happening through there, guys, is it's actually coming to an inflection point, but there's no momentum. And as you can see, as the moving averages come closer and closer, the market's just gone sideways, right? It's not really going up. It's not really going down. It's just going sideways. Now, if you're trading in the short term, like the hourly chart, that's got nothing to do with this here. But this same analysis applies to the hourly chart as well too. So there's a quick little tip for you guys. Whenever you're trading, look for the moving averages to start to fan out, and that's where you got momentum, and you're likely to have a much higher probability trade when you trade with that momentum. But when the moving averages start to cross over and start to come together, and you see momentum's going where there's really no momentum in the market, yes, we could have a good trade through that, but again, it's not a really high probability trade. So never trade when there's no momentum in the markets, when the moving averages are crossing over like that. Make sense, guys? Anyway, guys, I hope you guys enjoyed this session. Click on that first link in the description. I'll see you on my next live training. All right, guys, talk to you next time.